Welcome to our channel, where market analytics is processed with deep and innovative methods. Understanding the markets requires resorting to in-depth academic analysis. Knowing the statistical genetics of investment instruments will mean being prepared for price anomalies. We are constantly working with our entire team to understand the markets. For this purpose, we hope that we will discover new analytics and that these analytics will reduce uncertainties. The questions we are trying to answer are: how is the price performance of the stock compared to its competitors today? Have stock returns had extremes in the past? What is the impact of negative news on stock volatility today? Analytical answers to these questions can help minimize future risks. First, let's talk about the price change compared to the previous close. In the gauge chart, the price change of the stock on the last trading day is compared with its competitors in the graph showing the price performance for the stock. Considering its competitors in the market, the yellow color shows the daily percentage change in the share price. The red color gives the average of the percentage price changes in the competitors' shares. If the yellow color exceeds the red, the price of stock outperformed the average of its competitors. It can be said that the company, which is exposed to market conditions including its competitors, differentiates relatively positively in this respect. If red exceeds yellow, the firm's performance is below competitor averages. This is a situation that involves risks about the future of the stock. Let's take a look at the descriptive parameters of the stock, which you are considering trading, in order to take a good position in the markets and evaluate the opportunities. By the way, most of the parameters are dynamics that make sense in the long run. The company's beta value is 1.27. If the beta value exceeds 1, it means that the stock oscillates more than the market average. This indicates high volatility. The EPS value, which is an important index, is 0.4567. The market capitalization value, which expresses the weight of the company's performance in the market, is $31.3 billion. Public float value is also approximately 4.84 B. The stock of the company closed at 3.75 with an average volume of 38.16 M. While the stock oscillated in the range of 3.2975 to 3.4100 during the day, the 52-week movement range was 3.3100 to 5.7000. After talking about some descriptors for you, let's look at the return performance of the company. Nonlinear behavior is dominant in the stock markets. Here, examining whether the stock return is normally distributed or not is also testing the existence of the leptokurtic theory, which includes excessive oscillations. Therefore, Shapiro test will be applied to test the normality of the stock. In addition, the Gaussian and leptokurtic features of the distribution of the return on the share will be compared. If we examine the probability distribution of the return, the stock has performed as shown in the chart over the past week. It can be said that the returns behave more closely to the Gaussian curve. The last month's return distribution also reflects a dominant leptokurtic characteristic. The cumulative return graph is invaluable to have a final idea of the return. As can be seen from this chart, the cumulative return shows an upward for the time period expressed in the chart. The point that should not be overlooked here is not the increasing share price, but the return. After the increases in the return were eliminated, the downward movement of the stock return was integrated into the chart with drawdown. One of the important analytics that Quants Pro offers to its followers is news impact analysis. With this method, negative asymmetry on the volatility of the stock exposed to any shock or information can be detected. Stock in the chart below. The effect graph is given. When this chart is carefully examined, the effect of negative news on volatility is stronger. Comparison: let's examine the current state of the news effect versus last week. When the two charts are examined carefully, it is easily understood that the news effect for the share stays the same as last week. In addition, the effect of negative shocks on stock volatility is relatively higher. The volatile movements caused by the uncertainty in the markets require updating many technical analysis indicators, and even lead to the use of new technical analysis techniques, which are mainly academic. Based on this requirement, we now present to you the Quants Pro Advanced Fibonacci retracement that we have prepared specifically for the stock. The QP Advanced Fibonacci retracement allows us to capture signals that cannot be captured by classical or conventional Fibonacci analysis. This will lead traders who make algorithmic and systematic trades to determine their take profit or stop loss levels more accurately. Correct determination of these levels will also affect the net profit of the investor. Please note and take note of the extremely valuable Fibonacci levels, the first and only in the literature, which we will present shortly. When past prices are examined, it can be seen that there are fragile price movements at Quants Pro Advanced Fibonacci levels. Traders who know QP Advanced Fibonacci levels have a serious advantage over traders who use the classical Fibonacci scale. Thus, they will have a stronger immunity to the uncertain movements that dominate the markets. The advanced Fibonacci retracement levels determined by Quants Pro Analytics will change the arithmetic of the winner and loser average within the framework of game theory in favor of the investor. Now let's examine the difference between the classic Fibonacci and Quants Pro Advanced Fibonacci Analytics from the charts. It can be easily understood that the QP Advanced Fibonacci retracement can better detect significant price breaks.
Quants Pro, market insights searches for useful analytics. Don't forget to subscribe and like our content.